Hey guys, welcome back to my channel, and today I'm going to actually be sharing with you how you can invest in the stock market during a time when the stock market is really high and you're actually scared of investing in the stock market at the highest point. Then so necessarily you don't have to stop investing because the stock market is high. But if you actually have some investments in the stock market, I'm going to be sharing with you how you can actually what you can do to those investments if you're actually scared of or crash or whatever that might happen in the future. If that sounds good with you guys, let's get into it. So one, try to take profit on risky investments. So let's say you have an investment in Tesla, and Tesla is about, let's say, $700 then, and the stock market was really high, and you have maybe around $100,000 invested in Tesla at that time. So you actually really made a lot of profit from investing in Tesla at a low price. So, and you were worried the stock market is actually really high, and you worried for a crash might happen anytime, which would actually make your investments go down. So if you're actually worried about such investments like that, so one thing you could do is try to sell those investments. I know people always talk about, oh yeah, let's take it's for the long term. If your investment is actually not for the long term, if it was a investment, if it was a FOMO investment, fear of missing out investment, so you should actually sell those investments. Then maybe if you, let's say you made $100,000 in a whole Tesla, so you sell your whole investment. Now that you sold those investments, you have the profit. You have a profit. Now if the stock market eventually goes down or keeps going up, now you could just now you have a lump sum of cash in your hand. Now you could start investing into the stock market gradually, maybe 10% every month, which is going to be 10,000 every month. You could diversify your portfolio instead of your portfolio being focused on one sector. So now you could invest 10,000, maybe, whatever you are okay with. Now you could start investing every month. Invest slowly into the market. Like I said before, this was actually part of the 10% rule I was talking about. So 10% every month. So just because you made you sold your stock in Tesla or whatever investment you made profit on, you don't want to throw all that money into the stock market at once. You want to invest gradually, month by month, week by week, or whatever. So you don't want to put all your money into the stock at once, because if you, let's say, you sold your investment, you made profit, and the stock market eventually crashed, or there was some discount or correction or whatever happened. So now you could actually dollar cost back into that same stock again. Say maybe you put in 10,000 this month. You bought some stock about maybe around 400, 500, 400, 450. Now you dollar cost averaging into the market, which is actually the best way to do. But if you put all your money just because you made profit and on that stock, and you put all your money into that stock at once, again, so that actually you're not actually dollar cost averaging, because you put all your money in at once. Maybe the stock you might make another profit, but at the same time that's kind of risky, unless you just really that bold, you don't really care, then you just put you can always actually do whatever you want to do at the in the long run. But the best way, what all investors actually do is they dollar cost average into the market gradually. You don't have to put all your money in at once. So maybe you put in 100,000, like I was saying, you put in 10,000 today. Next month you look into it again, maybe there was some discounts, maybe now it's down, or maybe a little bit up, it start going up. So next month you put in a little bit more again, 10,000. So next month, you know, whatever you're okay with, you start putting that amount in every month. It's different from putting all your money into the stock market at once. That is not really advisable for anyone who is an investor. And just wanted to tell you guys that's how to actually invest when the stock market is actually high at a point. But also if the stock market is low, which is actually a good idea to start investing fast, because when there's a crash at the same time, doesn't mean if you have some long-term stock in your portfolio, how to invest when the stock market is actually also low, like when there's a crash or anything. So you start dollar cost average in, which is going to bring your average cost down. Now you start picking up a stock at a cheaper price, which is actually also smart during a correction or crash, whatever, in the stock market. So when the stock market is high, don't be afraid to take some profit. Take some profit, because maybe you're scared of losing all that profit you made. So don't be afraid to take profit and start dollar cost averaging in back once you take your profit. But when there's a crash, also if you have a long-term stock in your portfolio, doesn't mean you should sell everything. Do not sell it. If they are actually good companies, they are going to bounce back. Because that's why before you invest into a company, you should know, you should actually understand what the company is all about. You should do your research. You should do your due diligence in the company first. So when there's a crash also, and you have few, I mean, you don't have to start selling all your stock just to get into one particular stock. If they're good companies, just leave those companies. Let those companies start generating dividends for you, or maybe it's a growth stock. So those growth stock too, you could start dollar cost averaging into those stocks. So that's why I like dividend investing, because it actually gives me it's like making my money work for me. So even though I'm invested in those stocks, I still get paid every month, which the money could actually be reinvested into those stocks. I could just use the money to invest into another sector, which is actually what is actually good about dividend investing. But that seems to be all for this video. I just wanted to get in touch with you guys and to let you know that's actually a reasonable way to invest into the stock market. Just to review the whole process. First, don't be scared to take profit. 2, dollar cost average. And 3, use the 10% rule. Invest 10% this month, invest 10% the next month, gradually like that. So that seems to be all. If you want to start investing as usual, use the link down in my description. Grab 2 free stock when you invest with Webull, and which one of them is going to be worth about $1,000. And if you join Robinhood, you're also gonna get a free stock from Robinhood. Then I'll see you guys in the next video.